Hi, everyone. Thank you for joining. We're going to get started in just a few minutes. Thanks for holding tight. Thank you for joining today. I think that we can probably go ahead and get started. So I will pass it over to Jennifer from Veterans Education Access. Thank you so much for being here today.
Good afternoon, everyone. Thank you, Amy and Student Borrower Protection Center for having us. My name is Jennifer Esparza. I'm the Legal Affairs Director for Veterans Education Success. We're a nonprofit that works on a bipartisan basis to advance higher education success for veterans, service members, and military families. And our policy work is informed by our legal team, which provides free assistance relating to VA education benefits and student loans to all military-connected families. My colleague, Anna Bodwe, is on today, and she's a lawyer on our legal team and will share some information on PSLF as it relates to service members and veterans. So thank you again for being here and having us.
Thank you so much. We are so excited to be co-hosting this with Veterans Education Success, and I am just going to share my screen. So welcome to our webinar on accessing public service loan forgiveness. My name is Amy Salata, and I am the Outreach and Advocacy Manager here at the Student Borrower Protection Center. And we are going to walk through the changes of the PSLF program under the current waiver that exists. And a little bit of background on the Student Borrower Protection Center. We are a national nonprofit policy organization focused solely on alleviating the burden of student debt in the country. And we engage in a mix of advocacy, policymaking, and litigation strategy to rein in industry abuses, protect borrowers' rights, and advance economic opportunity for the next generation of students. I'm really excited to speak with you all today. One note about questions: if you could please place your questions in the Q&A feature of the chat. We will have my colleague Kat Welbeck will be collecting questions so that we can answer as many as possible. And we're also excited to share that Ashley Harrington, who is Special Advisor to the Chief Operating Officer at Federal Student Aid within the Department of Education, will be joining us for the Q&A. So thank you so much for being here, and let's get started. So to start, let's talk about the program as it was created and how it functioned until recently. So Congress created the Public Service Loan Forgiveness Program in 2007 to help public service workers who are struggling with student loan debt and to make sure that future students and graduates wouldn't be deterred from entering the public service because of their student loan balances. To put it simply, PSLF is the promise that if a borrower works in public service and makes payments for 10 years, the remainder of their debts will be forgiven. But as we'll see, and as I'm sure you maybe already know, it's a bit more complicated than that. So first I'm going to explain how the program works, and then what some of the issues with the program were, and then how you can benefit from the current waiver period to access your own PSLF forgiveness. So how does PSLF actually work? So more than simply working in public service for 10 years, there are normally 4 specific criteria. First, you need to have a direct loan. That's one of several federal loan types. Second, you need to be in the correct repayment plan, which for the program is generally an income-driven repayment plan. Third, you need to work in a public service field. And then finally, you need to make 120 qualifying payments, which is 10 years worth of payments. And I'll drill down on some of these for a moment. So only direct loans qualify for public service loan forgiveness. Direct loans have been the main federal loan since 2010. So if you took out a loan since then, it likely qualifies. But if you have an older loan, a federal family education loan, sometimes called a FFEL loan, or a Perkins loan, those do not qualify. What you can do though is consolidate those loans into a new direct loan, which is like refinancing with the federal government, and it pays off your old loan and replaces it with a new federal loan. Under the normal program, when you did this, you lost any credit for forgiveness that you earned on the old loans, since you're essentially taking out a new loan when you consolidate. But as we'll discuss, during the special waiver period, this isn't the case. So it's important to know that under the normal program, most people were blocked out because completely based on their loan type and had nothing to do with whether or not they did their years of service. Second, your direct loan needs to be in the right repayment plan, which is generally an income-driven repayment plan. And it doesn't matter how much you're paying, just that it's the right plan. And these plans go by names like income-based repayment, or IBR, income contingent repayment, or ICR, pay, spelled P-A-Y-E, and repay, spelled R-E-P-A-Y-E. Some other payment plans can qualify in certain instances, but in general, you want to be on an IDR plan, or an income-driven repayment plan. Third, to get public service loan forgiveness, you need to work in public service. And the focus is on your employer, not on your role. You can work at a government organization, so that covers most city, state, and federal employees, a 501c3 nonprofit, or certain other nonprofits. You also have to work full-time, which is defined as 30 hours a week, or what your employer says is full-time if it's more than 30 hours. And the 30 hours can be with more than one employer. Finally, you need to make 120 qualifying payments, and that's payments on the right loan, in the right repayment plan, and during the correct employment for a qualifying public service employer. The payments have to be made in full and on time. And if you leave public service and then come back, you can continue accruing credits and don't need to start over. These payments and the time in employment doesn't need to be consecutive. There have been some impacts of COVID during the public service, impacts of COVID for the public service loan forgiveness program. First, for those who are loans that are getting the payment pause, those owned by the federal government, each month of suspended payments counts towards PSLF loan forgiveness toward the 120 payments. However, you still need to meet each of the other criteria, and the most important of those is the public service employer. So now we'll talk about what has changed in the program and why. So as you may know, the initial rejection rate for the public service loan forgiveness program was 99%. Only some 800 applications out of 90,000 were approved. And folks were being denied because they had the wrong loan, or they weren't in the right repayment plan, or some other technical reason that had nothing to do with whether they actually did 10 years of public service. And as you can imagine, this was a huge problem and an incredible failure for the public service workers that PSLF was meant to support. Many folks took out debt to get the education they needed to be teachers or government lawyers, specifically because they had been told that after 10 years of affordable payments, the remainder would be forgiven. But some good news on this front is that last summer 2021, the Department of Education, for the first time ever, opened something called a request for information and asked borrowers to tell them about their PSLF experience. And this was an opportunity for borrowers who are going to get locked out of the program because of the bureaucratic program criteria, or someone who had delayed retirement to get those extra qualifying payments, to ask the Biden administration to fix the program once and for all. And nearly 50,000 borrowers submitted comments sharing their experiences with PSLF. This included teachers, firefighters, lawyers, government employees, and this was a huge response to the government's request, and they all had a consistent message that the program wasn't working for those that it was meant for. So within weeks of this request for information period ending, the federal government announced a special waiver that would address many of the issues raised by borrowers who filed comments. For a limited time, the Department of Education will retroactively grant credit towards PSLF loan forgiveness to borrowers for months that previously didn't count for the program, either because they had the wrong loan type or they weren't making the right payment. And we'll walk through each of these changes now. Essentially, what the department's waiver does is give public service workers credit towards loan forgiveness, regardless of what type of federal student loan they have, for any period of time since October 1st, 2007, when the program began, and as long as they were in qualifying public service employment and their loan was not in default, deferment, or forbearance. So even for months in which borrowers did not actively make a payment, as long as the loan was in repayment status, they can receive credit. These credits will be retroactive, so borrowers can receive credit for past payments that were previously ineligible. In short, for any month since October 1st, 2007, that a borrower had any type of federal loan, worked for a qualifying public service employer, and wasn't in default, deferment, or forbearance, that borrower can receive credit towards the 120 months required for loan forgiveness under PSLF. However, this waiver is not completely automatic. So normally PSLF requires that borrowers have a specific loan type, a direct loan, as I mentioned. And although the waiver allows borrowers with any federal loan type to get credit, those without direct loans must take some steps to convert their loans into direct loans through a process called consolidation, though they still will get credit for time before the conversion of the loan. And almost all borrowers, regardless of loan types, will have to certify their employment with the Department of Education for any periods of qualifying public service work since that date of October 1st, 2007. And the idea there is that if the government doesn't know when you had qualifying work, it can't award you the right credits. Importantly, the department's waiver only lasts until October 31st, 2022. So this means that any borrower who must change their loan type through consolidation or certify their public service work with the department must do so before October 31st, 2022. This does not mean that everyone will receive their new credit towards forgiveness by that deadline, just that the paperwork on the borrower's end has to be completed. And credits will be given on a rolling basis, and the department could take more time beyond October 31st, 2022 to process everyone. Although if you get credits from this waiver, those credits are permanent. So you don't need, if you don't receive enough to meet the 120 credit requirement, you could continue to accrue more credits after this deadline of October 31st, 2022, adding to those that you received during the waiver period. So with that in mind, there are 3 things that all public service workers with federal student loans should do. To figure out how this special waiver applies to you and what steps you individually need to take, every borrower should do 3 things. We'll talk about each, but briefly they are: confirm your past and present employers are qualifying public service employers, determine your loan types and consolidate if necessary, and certify your employment. So first, confirm that you have a qualifying employer. Nothing about this requirement changed during the waiver. You still need to work in public service, except that during the waiver period, you don't still need to be employed at the time that you apply for forgiveness after your 120 qualifying payments. Remember that qualifying employers include any level, any government employer, so that's federal, state, local, or tribal, including the military, any nonprofits that have a 501c3 tax exempt status. Certain other nonprofits also qualify. However, unions and political organizations do not. So any organization who has a tax status of a C4 will not be eligible, nor do any for-profit employers qualify. So if you aren't sure whether your employer qualifies as a public service employer for PSLF, the Department of Education maintains a list of qualifying public service employers that you can search. It's important to note, though, that this list isn't necessarily exhaustive. So if your employer doesn't appear, but you still believe that they are a qualifying public service employer, you can still proceed with the PSLF process. And you can access this list by using the PSLF help tool available at studentaid.gov. And the employer database is the first step in the help tool, so you can quickly access it to check your past and present employer's status. Step 2, what type of federal loans do you have? The 3 major loan types that most folks today have are direct loans, federal family education loans or FFEL loans, and Perkins loans. For public service workers to get loan forgiveness for their FFEL and Perkins loans under the PSLF waiver, they have to consolidate, which again is like a refinancing process with the federal government, and they'll have to consolidate those loans into a new direct loan. Remember, what's special about the waiver is that normally when you consolidated your loans, you lost any past credit towards forgiveness. But during the waiver, you can keep that past credit and apply it to the new consolidated loan. One thing I want to mention here, because we get asked a lot of questions about this, is that Parent Plus loans generally are eligible for PSLF under the normal program criteria. But during this particular waiver period, they are not eligible. However, in the Q&A, we could talk about one way that borrowers with Parent Plus loans and student loans of their own could potentially benefit from the waiver. The final step that all public service workers with federal student loans should do is certify their qualifying employment with the Department of Education. Remember that qualifying employers are any level of government, 501c3 nonprofit employers, and certain other nonprofit employers. And the form to do this is called the PSLF form, but it was previously called an employment certification form. And borrowers should certify their employment using the PSLF help tool, which is the same tool that they can use to confirm that their past and present employers qualify them for PSLF. And this tool will generate the form with you, which your employer will then have to sign. Okay, so next I'd like to pass it on to Anna from Veterans Education Success to talk about some of the ways that this waiver applies to service members and veterans.
Great, thank you, Amy. So my name is Anna Bodwee, and I'm a lawyer at Veterans Education Success, and I'll be highlighting two aspects of the PSLF updates that relate to military service. First, I'll talk about when military service counts towards PSLF, and then I'll discuss how to certify your employment with the Department of Education. So in terms of what counts, if you had federal student loans while you were on active duty, all the aspects of the waiver that Amy already discussed also apply to you. So if you were on active duty and had the wrong repayment plan or the wrong type of loans or made late payments, those months will count towards PSLF just like they would for any other public service job. Additionally, as Amy mentioned, there's another category of loans that counts towards PSLF, particularly for service members and veterans. If your loans were in deferment or forbearance while you were on active duty, those months will count towards PSLF. Unfortunately, right now, other types of deferments and forbearances do not count. This is only available if you had a deferment or forbearance while you were on active duty. And also keep in mind that your military service still must have been full-time. So if you served in the Guard or in the reserves, you must have been on full-time active duty to be eligible. And if you believe you're eligible, then you'll need to certify your employment with the Department of Education. And they're working on setting up a data matching system with DoD, but right now we're not sure when that will be rolled out. So we strongly recommend that you go ahead and submit that employment certification form. And there are a couple ways you can fill it out. If you've recently left the military and it's easy to find someone who can sign your form, you can go ahead and get a signature in section 4 of the form from anyone in your chain of command. And actually, just this morning, the Department of Education announced that they will also be accepting DD-214s. And that's going to start next week. So to apply under this method, you'll need to fill out the certification form and check the box in section 2 that states that your organization has refused to certify your employment. Then you'll mail your completed form and a copy of your DD-214 to the Department of Education. If you've already submitted the employment certification form without a signature and haven't heard back, we encourage you to go ahead and resubmit it next week in the way I just outlined, checking that box that your employer refused to certify and attaching your DD-214. That will ensure that the Department of Education will process your form under the new policy they just announced. And finally, I just want to encourage any military connected folks who are listening to please contact us at our email address on the slide if you have any questions or want to discuss your particular situation. And even if we answered your question in the webinar or you get your issue resolved, please do reach out to us anyway. It's really helpful for us to know what kinds of problems veterans are having so we can advocate to make the system work better for everyone. And with that, I'll pass things back to Amy. Thank you so much.
Thank you, Anna. That's really helpful. Okay. So now that we've gone over some of the requirements of the new waiver and how they apply to service members and veterans, now we're just going to discuss the 3 steps that borrowers should take to make sure that they benefit from the waiver. So I'm going to briefly show you some step-by-step instructions on how to do this, and we'll start with confirming your employer is PSLF eligible. So you'll need to log into studentaid.gov, and if you don't know your login information, there is a way to reset it and get access. You'll want to hover over Manage Loans located in the top toolbar, and then click on Public Service Loan Forgiveness in the drop-down menu. You'll see the PSLF help tool there, which you should click to launch. Borrowers can look up all of their employers since October of 2007 in the help tool by entering their tax employer identification number, or EIN, and also their dates of employment. And you can check your employer's EIN by looking at your W-2, by asking your employer, or for some larger employers by Googling them. If your employer appears when you run the search, you know that your employer is a confirmed public service employer, and you can proceed to the next steps of checking your loans and consolidating if necessary. If your employer doesn't appear, you could still be eligible since this list isn't exhaustive. It might mean that no one from that agency or the organization that you work for has sought PSLF in the past. So don't be discouraged by this, especially if you work for a government agency or a 501c3 nonprofit and you know that you're eligible. Some eligible employers will show up as ineligible. So once you determine whether your employers are eligible, you should confirm what type of loans you have. This can be really confusing, and many folks don't necessarily know. So to see all of your federal loans, you should log into your online account with studentaid.gov. You'll have a dashboard there that lists your loans. Any that say direct are direct loans, and any that don't say direct will have to be consolidated. For a more granular list, you can download your aid data, and you can see how to do that on this slide. Once you download your aid data, you'll be able to tell what type of loans you have. Here you can see 2 screenshots of the data report. At the top, each says loan type and each says FFEL for Federal Family Education Loan. They don't say direct, so they'll have to be consolidated. Now on this report, you'll also see loans that have been paid off or already consolidated. You only need to confirm the ones with a balance, since those are the ones that you're trying to consolidate to get forgiven. Okay, now if you have non-direct loans, you'll want to consolidate them. So to consolidate your loans, you'll need to log into studentaid.gov again, hover over Manage Loans, and then click on Consolidate My Loans in the drop-down menu. You can access the consolidation application here. It will then guide you through the steps that you'll need to take, including selecting which loans you want to include in the consolidation, confirming the amount and interest rate of the new loan, selecting your payment plan and servicer, and then signing for the loan. Now, here is a tip specific to the waiver. If you have a mix of older and newer loans, so some would be closer to the 10 years needed for forgiveness under PSLF, if you consolidate all of the loans together, the new loan will be awarded as much credit towards forgiveness as your oldest existing loan. So if you consolidate old and new loans, when the consolidated loan is ultimately forgiven, the entire amount will be forgiven. This is useful for folks who have older FFEL loans, but also newer direct loans. You might not think to consolidate your direct loans because they already qualify, but if you do consolidate them, they could be forgiven on the same timeline set by the older FFEL loans. Remember that for the regular PSLF program, you need to be enrolled in an IDR plan, or an income-driven repayment plan. So when you're consolidating, it's a good idea to select one of the IDR plans as your payment plan. And some of the names for these, again, go by names like income-based repayment, or IBR, income contingent repayment, or ICR, pay and repay. And these payment plans within income-driven repayment are all different. And there is a payment calculator tool that will help you choose the plan among these 4 that is best for you. Finally, let's review how to certify your employment. So just like in confirming that your employers qualify, you'll need to log into studentaid.gov again, hover over Manage Loans, and then click on Public Service Loan Forgiveness. So we're going to go back to the PSLF help tool. You'll remember this step from earlier. It was the first step in the help tool. So here you can add your employers using your EIN and your dates of employment. And then the PSLF help tool will guide borrowers through the next steps, including identifying which loans they want to include for PSLF forgiveness. And once you complete each of the tool steps, it will generate a form that you can use to certify your employment. Again, this form is called a PSLF form, but it was formerly called an Employment Certification Form, or ECF. And this is the form that you must submit to receive the benefits of the PSLF waiver. Once you have the PSLF forms that you need, you'll need to have any employer you are claiming as a public service employer sign the form. And once the forms are signed, you must submit them to the designated federal student loan servicer for processing to make sure that you get the maximum benefit that you qualify for. Everyone must submit a new form that reflects all of their qualifying public service work by that date of October 31st, 2022 to benefit from the waiver. And if you worked it for a nonprofit that is now closed, or if your employer is refusing to sign the form, there is a box to check on the form that one of these is the case. So if these are issues that people are encountering, there are ways around them. To send the forms, you're able to fax or mail them in. Additionally, if you have Fed Loan Servicing already, which is the exclusive servicer for the PSLF program, there is an option to upload documents to their website. You could also do all three of these things to ensure that your forms are received. So what's the process for getting forgiveness? This is the general process, but it applies to the waiver as well. So FIA, operating as Fed Loan Servicing, is currently the exclusive servicer for public service loan forgiveness. So borrowers seeking PSLF need to send the PSLF forms they have to FIA, which will do a preliminary review of eligibility. If you have a qualifying loan, your loan will then be transferred to FIA for servicing, at which point it will run through the other criteria, such as employment and qualifying payments. Unfortunately, there have been a lot of problems with people finding out too late in the game that they thought they qualified, but something had gone wrong. So for this reason, we advise that you submit a form as soon as you're interested in public service loan forgiveness, and then do it again each year until you qualify for forgiveness, and also that you do it every time that you change public service employers. You don't have to do this. You could document everything after 10 years, but this way you have a great chance of catching any issues that arise and dealing with them as they happen. The Department of Education has stated that they are continuing to review PSLF cases on a rolling basis, so there is no exact timeline for when you might receive notice from them. You may also have read that Fed Loan Servicing is ending its contract with the department. This is true, and it was recently announced that another company is taking over. And at this point, it's still okay to have everything go to Fed Loan because the transfer won't happen for a little while. And if anyone has to have their account transferred, the companies can handle it. However, you should keep a copy of all of your own records because sometimes things get lost from one company to another. Now we'll just briefly review some common issues that borrowers have faced pertaining to the waiver and how to address them. So when you submit your PSLF form or employment certification form, it's important that you make sure the form is easy to read. If your employer has written over or tried to correct things after signing the form, you should request a new clean application from them. Often, if anything is crossed out or written over, like in this picture, this form will automatically be rejected, or the time that you worked for this employer will not be counted with your other applications. Your application could be delayed or rejected if you submit the form as is with this scribbling. So requesting that they complete another form could save you a lot of time. Excuse me. When borrowers complete the PSLF help tool, the form suggests that a borrower must take their loans out of administrative forbearance under the payment pause, stating the following under the subheading, get out of deferment or forbearance. This can be a bit confusing. Because student loans were placed into administrative forbearance under the payment pause, and pause payments continue to count towards PSLF eligibility, borrowers do not need to stop postponing payments in order to make qualifying payments. Although the form goes on to state that a borrower does not need to remove their loans from the payment pause, we understand how this language can be confusing. If you choose to use the PSLF help tool to complete your application, many borrowers are unsure how to proceed when they get to this question. If you think you have already made over 120 payments, the PSLF help tool might not let you choose that option. And this is okay, just ignore it and choose no, I haven't made 120 qualifying payments and move on. Don't let this question hold you up from taking the necessary steps to receive the benefits of the PSLF waiver. And no matter what you select, your account will still be reviewed in full by the Department of Education. Finally, from what we have seen, notices with inaccurate PSLF payment counts have been one of the biggest sources of confusion with the PSLF help tool. If you are consolidating an older FEL loan in order to take advantage of the PSLF waiver, you'll receive a letter from FedLoan after the consolidation is complete, noting that you have one qualifying PSLF payment. Don't worry when you receive this letter. Here is what is actually happening. This is an auto-generated letter that is hard-coded to review after under the standard PSLF program requirements that we reviewed at the very beginning of the presentation. When you consolidate your loans, you'll be asked if you're doing so to take advantage of the PSLF program. And since you are consolidating for the purposes of PSLF, you'll say yes. And after your consolidation is complete, FedLoan Servicing will notify the Department of Education, who will review your account to determine how many qualifying payments you've made towards the PSLF waiver. You'll then receive a second letter from FedLoan Servicing saying how many payments you have towards the waiver. And as I mentioned before, this process can take a few weeks to a few months to complete, and the department does these in batches, so there's no concrete timeline from when you might receive notice. So finally, let's just review some important takeaways. So remember that credit will be given for months during which any loan type was in repayment and not in default, deferment, or forbearance, excluding military forbearances. The deadline to apply is October 31st, 2022 to consolidate and or submit your PSLF forms for qualifying employment. Remember to confirm your past employers are eligible, confirm your loan types, and consolidate if necessary if you have one of those older FEL or Perkins loans. Submit a PSLF form for any qualifying employer that you're seeking time for, and file a complaint if you experience any issues. We keep a list of ombudspersons on our website across the US and also the federal ombudsperson. So thank you so much. And now I will pass it along to Kat and Ashley for questions.
Thanks so much, Amy. It was great. A lot of information. And again, to echo Amy, Ashley, thank you so much for joining us this afternoon. So just before we jump into the Q&A, for everyone who's been putting in questions, thank you so much. We've gotten a lot of really great questions, but also feel free to keep dropping questions as we go through the Q&A. One thing I'll note is we may not be able to answer your questions specifically, but what we'll try to do is give you a general answer because we can't provide direct guidance on specific situations, but we'll try our best to answer as best as we can. But hi, Ashley. I'm going to start with this first question. So while I said we're not going to read them verbatim, I am going to read this one because I think this answer should be pretty easy and it's also very exciting. So Ashley, we have a question from someone who received a letter from FedLoan stating that the letter states, we've determined that you've successfully made the required 120 payments in order to have all or a portion of your loans listed below forgiven. So this person says their balance shows 0. Does this mean that their loans have been forgiven?
That's exactly what it means. And we're so happy that you are one of the more than 113,000 borrowers who have now gotten forgiveness under the waiver. Congratulations on all of your service and all of your and getting this done. That's exactly what it means. Do the happy dance. You're done. You're finished.
Awesome. What a great way to start. So next question. We've gotten a couple of questions about the payment pause. So do you mind clarifying, do payments during the COVID forbearance count towards PSLF credit?
I'm sorry, I missed it. So sorry.
Oh, sorry. No, it's okay. How do payments during the COVID forbearance count, or I guess non-payments during the payment pause, how do those months count towards PSLF credit?
You can get credit for every single month during the payment pause as long as you submit a PSLF form showing accompanying qualifying employment for this time period. So none of us have had to make payments since March 2020. You just want to make sure you have a form on file that says I worked for a qualifying employer all of these months since March 2020. Get that in and you will get credit for all of these months.
And then for people who are retired, are there ways that people who may not currently be in public service employment right now because they're retired or maybe switch jobs, are there ways that they can benefit from this waiver?
Absolutely. So one of the other things that doesn't get talked about enough about part of the waiver is normally when you apply for forgiveness, you have to be employed at a PSLF eligible employer when you apply and when you receive that forgiveness. We have also waived that requirement. So if you're retired, but you have qualifying public service employment post October 2007, get those ECFs in and you can still get your loans forgiven under the waiver. So I would go ahead and get that done.
Wonderful. And then just as a follow-up to that, does the qualifying employment have to be consecutive over those 10 years or 120 payments?
It does not. You can do it in whatever order over whatever time period you need to. However you get to 120, just get to 120. You can do 110 payments, take some time off, do family stuff, go back to school, go work at a for-profit employer and do the other 10, right? It doesn't matter. They don't have to be consecutive. All you need is 120, however you get there.
Awesome. And then for qualifying employers, does it matter what someone does? So for example, if someone has their own nonprofit and they're the executive director, or does it matter what your exact role is at that nonprofit? Can you still qualify?
Absolutely. It's about the employer, not about what you do there. We're not going to ask you what you do at your employer. All we ask for is the EIN, the name of the employer, and whether you're working full-time or how many hours if you're certifying some part-time employment. We don't care what you do there. We just care who your employer is.
Awesome. And then what about employment before 2007? Can that count towards PSLF?
Unfortunately, it cannot because PSLF didn't exist before October 2007. So we are only looking at employment that has happened since the program was created.
Awesome. Okay. And then for people who may have had multiple employers, like you said, pulling together their 120 from different employers, do they need a signature for every job that's a qualifying employer?
Yes, yes, yes. You need a form for every single qualifying employer. If your employer has closed or they no longer have their HR records, you can submit a W-2. You have to verify your employment some other way, but you are going to need to certify employment for every single employer that you are trying to get counted towards your PSLF forgiveness.
And then what about people who maybe have, I know we talked about people who may have had older FFEL loans. What if someone consolidated their FFEL loans prior to the waiver? Can they still get credit for those previous payments under their FFEL loan?
Yes, this is still for you. If you've already consolidated, what you want to do is just make sure you have your PSLF form certifying employment for all of that employment that is pre-consolidation, pre-your consolidation, and post-October 2007, and you can get that credit added in.
Awesome. And then, so a similar question about consolidation. What if someone has like a mix of direct loans that are different ages? To clarify, I know Amy mentioned this in the presentation, but if they consolidate those loans, does that mean that the forgiveness timeline is the one of the oldest loans?
It does, unless that oldest loan is a Parent Plus loan, as Amy talked about. But if it's a student loan or a FFEL loan, the oldest one gets the most credit. And if there's some lack of overlap, you're going to get the maximum amount of credit for the maximum amount of months that you can for that consolidation loan.
Great. And then also for consolidation, are there things that when you consolidate your loan that might change about your loan? So for example, the interest rate or anything else?
Yeah. And so, for a lot of people, in order to take advantage of it, they are going to have to consolidate, but there are consequences to consolidation, and you definitely want to think about those when you're making your decision. Your interest rate could change. It could go up because when you consolidate, your interest rate becomes an average of all of the interest rates. So some of your interest rates for some of your loans could go up. Your payment could change. It will change. It could likely go down, but that means overall your payment period could be longer. But if you're working towards PSLF, that probably doesn't matter to you. If you had interest already, it will get capitalized, meaning that it will get added to your principal balance. So then you'll start accruing interest on that new balance. Again, if you're working towards PSLF, that may not matter to you. But it is just something to think about. If you have a Parent Plus loan and you consolidate it, it does change the repayment plan options that are available to you, because for Parent Plus loans, the only income-based repayment plan that is open to it is income contingent repayment, which is the least generous of the income-based repayment plans. And once you consolidate a loan with a Parent Plus, that extends to that entire consolidation loan. So there are things to consider when you're making these decisions, but it is the way that if you have FFEL loans or Perkins loans that you are going to get access to this program and get all your credit under the waiver.
Very helpful to know. And then for people who, when they go through the waiver process, when they're deciding what type of plan to do, is there any benefit to, choosing to do an income-driven repayment plan, or why might they want to make sure that they're in an income-driven repayment plan past this waiver period?
So after the waiver period is over, a normal PSLF rules will apply. Under normal PSLF, you either need to be enrolled on a standard plan or an income-based repayment plan. The standard plan for regular direct loans is a 10-year plan. And it's a fully amortizing plan. So if you're just on the standard plan, at the end of that plan, you may have nothing to forgive. And so if you want to get the maximum benefits of public service, you want to be on an IBR plan. And you want to make sure that you're getting that set up before the payment pause ends, so that you can continue to accrue credit towards the 120 when the payment pause ends.
And then another question so what about someone who's consolidated a loan with like a traditional bank or consolidated with SoFi? Is there any way that they can benefit from PSLF?
No, because unfortunately you refinance, you didn't consolidate. And once you refinance, you now have a private loan. And this program is still only available to people who have federal student loans. So if you've refinanced your federal loan to a private loan, unfortunately, you no longer have access to federal programs like PSLF.
Thanks. And then Ashley, one more question. Sorry, I know you answered this question before, but they weren't on the line, so just going to repeat it. Again, can people pull together multiple employment over years to count towards PSLF?
Yes, as long as it's after October 1st, 2007, and it's a qualifying employer. It doesn't matter. Your 120 months don't have to be 10 in a straight line. It can be however you get there. So get as many forms as you can for those time periods and get them in and get all your certifications.
Awesome. And then a follow-up to that question, same question. And again, if that person had an older FFEL loan consolidation, can they get credit for the previous payments under that FFEL loan?
Yes, you've got to submit those PSLF forms. You've got to show whatever month you're trying to get credit for, you've got to show that you had qualifying employment for that month.
And then we got a couple of questions about what if someone actually gets over 120 payments during the payment pause? Are there any refunds or benefits?
So the way it works is that if they recalculate your payments under the waiver, and you have made an excess of 120 payments because of the waiver on that direct loan, not on a FFEL loan, borrowers are getting refunds. But if you reached 120 during this period, you probably wouldn't get a refund because you haven't had to make any payments, right? And so you haven't actually overpaid yet. But and it doesn't, and if you have FFEL loans and you're just now consolidating, and it ends up being you had 130 qualifying payments on that FFEL loan, you won't get any refunds for that. You can only get refunds on payments made on that direct loan that exceed 120 once the waiver is applied to your account. A lot of folks have gotten refunds. That's exciting to hear too. Not just the people who have getting their discharges, but people are getting discharges and getting money back.
We love to hear it. And then as people are getting notices that their servicers are changing, is there any advice that you would tell borrowers to do about, maybe keeping track of their payment history or making sure that they're getting all the right information?
Yeah. So we are monitoring, we're doing oversight, we're working with federal and state partners, we're doing everything we can to make sure these loan servicer transitions go smoothly. And you should not, and we are making sure that your account information goes over. But this is technology. These are multiple companies. You always want to be your own best advocate. Keep as much paperwork as you can. Keep your documentation. Keep your copies of your PSLF forms. Keep copies of the payments that you made in your payment histories. Keep as much as you can, all the way up until you get forgiveness. It doesn't hurt. You shouldn't have any issues either way, but just as a backup, it does not hurt to keep your own records.
Awesome. And then we have a question, and I'm going to make sure I understand this correctly. So if someone has like multiple loans, so maybe it's over, different periods of times, maybe they have a mix of direct loans, maybe they have a mix of direct and FFEL loans, but how does that count towards their number of payments? So whether they have like a mix of direct loans and they've made payments on all those loans, or say they have a mix of direct and FFEL loans, is there something that they should do to make sure they get credit for the waiver?
So you're going to get, whenever you consolidate, whatever loans you consolidate, and you don't have to consolidate all your loans together. That's again a choice. You can consolidate some or all of your loans. You will get credit for the loan that has the longest period in repayment. So if I have a FFEL loan from 2010, but I have a direct loan for 2015, if I consolidate them together, the entire consolidation loan can get credit all the way through 2010, as long as I have that accompanying employment and I was also in active repayment status. So you're going to get the max amount of credit for whatever is that oldest loan in your consolidation.
And then does volunteer time count towards qualifying employment?
It does not. You can only get credit for employment that was paid employment, so not volunteer work.
And then what about time in in the reserve? So if someone's in the military and they're in the reserves, would that count?
Yes, I'm pretty sure, right? I think you would be on because you're in military service. So yes, that counts. And as we were talking about earlier, there's different ways you can submit forms to certify that service. Jennifer, am I answering anything wrong on that? Because I always don't know the specific military pieces.
Sure. So if you are in the reserves and you serve on any active duty orders, that time would count. So you would need to be on a full-time status. So any active duty that you do, you can supply those DD-214s when they are approved to use to your PSLF. So reserves do count as long as you are on active duty orders during that time.
Thank you. Learned something too.
I was going to say the same. I was like adding that to my
Right.
today.
But you can be on reserve and not on active duty status, and then you wouldn't get credit but you could be on reserve, Jennifer, right? And working at a qualifying employer while you're not on active duty status, but you wouldn't get credit just for your being on reserve.
Absolutely, yes, because reserves are considered part-time until they're activated.
How, okay, but so, sorry guys, we've hijacked your thing, but this is great. So you can get credit for 2 part-time employers under PSLF. So if you are on active duty status, if you're on reserve and not on active duty, you're considered part-time. How many hours are you considered part-time for?
So it really depends. Generally, for reservists, they are reporting to duty for 1 week in a month and 2 weeks in the summer. And so it really depends on how many hours they're spending. Some units will make it 4 days, 3 days. So I think it really would depend on the individual, on an individual case basis.
Okay, thank you.
And then one more question we have. If someone has, do you mind going through the process if someone has direct loans and they also have Parent Plus loans, how it's possible that they may be able to benefit from this waiver?
Yeah, so if you have Parent Plus loans and they are newer than student loans you have, and it could be the case it could be the reverse, right? There are some people who have Parent Plus loans and then take out their own student loans later. And so I'm talking about the first case where you have your own student loans that are older, and now you took out Parent Plus loans for your student. You will then consolidate them together. And because your student loan is older than the Parent Plus loan, the entire consolidation loan will get credit for that older loan. If it's the reverse and your Parent Plus loan is older than the student loan, you're only going to get the credit for the student loan. You won't get any additional credit for that longer period in repayment for that parent loan.
Very helpful, thank you. And then also you just mentioned when you were just talking to Jennifer, you're talking about part-time. Do you mind talking again about how people who maybe have multiple part-time jobs can also qualify for PSLF?
Yeah, so if you have multiple part-time jobs and they are all qualifying employers, so I work part-time at a state agency and I work part-time at a 501c3 nonprofit. I get, and for the same employment period, so for the same 6 months, I need to get both forms filled out and completed. And if I work 15 hours at each, that equals 30 hours. And then I can get credit for those months in repayment because I work the equivalent of a full-time job at qualifying employers. And so as long as you're working that 30 hours at qualifying employers, and you might have multiple qualifying employers, or you might have 2 qualifying employers and one that's not qualifying, but as long as you get that 30 hours, then you can get credit for those months.
And then also you mentioned during the presentation that certain types of like medical professionals can qualify for PSLF depending on the type of work they do. Do you mind talking a little bit about like what kind of jobs and what kind of employers in that umbrella would qualify for PSLF?
For medical professions?
Mhm.
So you need to be an employee of it has to be a nonprofit organization. No for-profits count under current PSLF rules. So no for-profit corporation. So if your W-2 is issued by a for-profit corporation, even if you work in a nonprofit setting, under current rules, you do not get credit for that employment. So if it's a nonprofit, and most medical settings are likely 501c3s, if it's not happens to not be a 501c3, it just needs to meet the be a nonprofit, another nonprofit status, but engage in qualifying public service duties, and that is, and public health is one of those, emergency management, others. And so you can likely still get credit for that nonprofit, even if it's not a 501c3, but I imagine most of them are going to be 501c3s. But so it really just matters to make sure that you are employed by that entity, not by like a for-profit entity working in conjunction with that hospital.
Awesome. Yes. So we have another question. Do spousal consolidation loans count towards PSLF?
So if you have failed spousal consolidation loans, you cannot consolidate them into the direct loan program because we no longer have authorization for direct spousal consolidation loans. So because you effectively have nothing to consolidate into, you cannot get work towards PSLF if you have failed spousal consolidation loans.
Thank you. And that was actually our last question. So like right on time. Thank you so much, Ashley. That was wonderful. And also want to thank Jennifer and Anna so much for partnering with us today to host this webinar, but we really appreciate it. And for everyone who joined. And so I'm going to hand it back over to Jennifer, but I just really want to thank you all so much.
Thanks so much. Bye, everyone.
Yes, thank you so much, Ashley, and everyone from SBPC. We really appreciated being part of this panel with you and getting a chance to reach others that have questions about PSLF. So thank you.
Thanks so much. And I realize, I know Ashley just popped off and Amy, you're about to close this out, but one person just asked about qualifying with less than 30 hours. So for PSLF, the time is either 30 hours, whether that's multiple part-time jobs or one full-time job, or an employer designation that you're working full-time. But I will stop now and thank you all so much.
Thank you for joining. Have a great rest of the week. And thanks to Veterans Education Success for joining us, and for Ashley from Federal Student Aid. Have a good week.